It's Sunday the 31st of December 2017. I thought it would be a good opportunity to go through some of the markets that we follow relating to gold, being New Year's Eve, sort of do a bit of a recap and what I'm expecting in the coming months in 2018. Gold itself had a pretty good last sort of 2 or 3 weeks of the year since that rate hike, the last rate hike in mid-December. It's been straight up and it closed sort of on a 3-month high. This is a futures chart, so it's a little bit different from the spot market, but I like it because it shows some of the volume stats. But yeah, closed above 1300, which is a really good result. Some of the trading around Christmas New Year periods a little bit hard to read sometimes, low volumes, so it's hard to tell if it's going to be a good indicator of things to come in the next couple of months, but definitely a positive sign there. It still seems there's not a whole lot of interest there. Some of the other more, Bitcoin and the tech stocks are still more important. I've drawn this purple line here as sort of a key level that might be challenged in 2018. One sort of theory I've heard proposed about this bottom is that it's kind of a complex head and shoulders bottom. And one of the key things for that, one of the key criteria is that it's kind of symmetrical in the down and the up cycle. So I took this level here around 1380, 1390. I think it might be slightly lower on the spot chart. That's a key level, and it took probably about 2.5 years. So from May, June 2013 to November, December to bottom. So that kind of is the template for how long we're expecting it to stay in that period on the up cycle, and that would be a perfect sort of symmetrical head and shoulders pattern, which has got more sort of generally better results than some sort of off symmetrical pattern. So you're sort of thinking in this sort of May, June, where we are reaching that 2.5 year period since the bottom. So I'm looking for it to start to that being a bit of a guide there. That's the key level that we're looking for in 2018. After that, the key level I think is around that 1550 sort of mark, which is when it plummeted through. You can see there the huge volume on the original move down, which is at that 1550 level. So that's the next level after that, but I'm not necessarily expecting that to get challenged, but I think that's the target if we were able to break through that 1390, 1400 level on good volume. Obviously, it's tested this downtrend pretty well in the last couple of months, and that's what you want to see after that breakout. And we've had that really nice increase in volume here, sort of the highest volumes ever in the futures markets, and not a lot of chat at the same time. So I guess you would call that sort of stealth buying in by larger buyers, because there's not a lot of retail chat about the gold markets, and it's that's probably what you want to see, to be honest. Some of the other charts that we follow, the dollar index. If you remember, I've been bearish on this chart all year. I was calling this top around 100, this head and shoulders top. The template I've been using is the last rate hike cycle in 2004 to 2006, which is this orange box here. And this was my in sort of thinking about July, August. I made this call that I expected this to be a bit of a sideways move here, following sort of an analog from this pattern here, which was after that sort of down move in 2006. The dollar index consolidated before it broke down again, and then up into 2008 when they had the financial crisis. But so that's kind of what I've been looking for. And just in the last couple of weeks, again, as you'd expect with gold being quite strong, dollar index has been very weak. It's this chart. I'm not sure if this is completely accurate. Some of these futures charts are a little bit inaccurate here. Not necessarily trying to show not showing what I'm trying to show, but it's kind of almost breaking down from a little bit of a mini head and shoulders top. Previously, I thought that once it broke through this 94 level, we were looking at maybe a target back up to these 96 and a half sort of level, but it broke down. That was really a bit of a false top there, and now it looks like it wants to head down again. So the target from that you'd expect to be sort of another move lower to say below 89 sort of target. It is getting a little bit oversold here. And yeah, it was very bearish action in the last couple of weeks for the dollar. A lot of commodities doing very well aside from gold, but copper, oil, two of the other larger markets doing extremely well in the last couple of months of the year, both closing on, I think, in the case of oil, probably near a 2-year high, and copper, I think, is 3.5, 4-year high. So that's, dollar index is definitely showing, like, to me, it looks like it wants to go lower. That's definitely the path of least resistance at the moment, and there's not a lot of impetus for it to go higher here, which is sort of unexpected given the strength in the US equity market. That had been the correlation had been quite positive between those two, sort of in this bull run in 2015, 2016. But so some of the other markets, so Australian dollar is a little bit of a funny one. I've been quite bearish on the Australian dollar for a while, but with the general sort of commodity strength and US dollar weakness, that hasn't quite played out this year in 2017. But I still think that the domestic economy is weak enough that that will outweigh the positive sort of global factors, which, general China strength, US dollar weakness, that usually is a good environment for Australian dollars. But I think the domestic economy is very weak, and I'm quite bearish on stuff like housing. So I'm expecting this to turn lower at some point again. On the chart, it's really testing this sort of 78 level, which has been a consistent zone for the last 18 months. Again, maybe I talk too much about head and shoulders patterns, but it is one of the most reliable chart patterns. Potentially this starts to form. This to me looks like it could be a bit of a head, and maybe we start to form a bit of a shoulder. But as I said, with the commodity strength, that's generally a pretty good environment for Australian dollars. So it's going to take some domestic factors to start coming in to push it lower. And that may, I think that'll start to unfold a bit more in 2018. And after that, maybe we'll start to head back down toward this sort of 70 cents level, but it's sort of a bit trendless at the moment. So you really got to focus on the fundamentals a little bit there. So that sort of feeds into the Australian dollar gold price. We just had a decent year. It's been sort of steadily trending up, testing this lower trend line again, which I've had on this chart for probably the last 18 months as well. Closed above this sort of 1650, 1660 level is what I've been looking at as kind of a bullish line in the sand, and it's closed above that again. Gold strength was sort of more so than Australian dollar strength, so it's still trending up, even though Australian dollar's been trending up also in the last couple of weeks, but still looking pretty good. Most of a lot of the bigger Australian producers are at all-time highs or 5-year highs kind of thing, like Northern Star, Regis is all, St. Barbara, Evolution, they're all doing quite well. So yeah, generally that's a pretty constructive chart, and I can't see that uptrend being tested too much. I think there's still pretty good strength there. Some of those stocks may be a little bit overbought, and I've moved out of most of those because I think there's probably better opportunities in some of the lower tier producers, and I'll do some videos on those in the next couple of days. Some of the other things that I'm looking at, the gold miner ETFs did quite well in December. GDX sort of bounced off, sort of held this 21 level and bounced up to 23. So I had that sort of 10% move in the last couple of weeks. Really good volume, or sort of some really good price action. The volume there might be a bit misleading. I think that's probably relating to, or maybe that's relating to the rate hike as well. But that was a bullish candle there on the rate hike. So there's very little interest in this market. Something that I talked about in my previous video, I think, in relation to the gold miner ETFs is just the lack of volume. You can see here, this is sort of a 50-day, I think a 40-day average that I use. And that's the lowest it had been for 2 years in the GDX, and the same in the GDXJ. No one's paying attention to these. And the most similar time I'd seen this was particularly this bit of a breakdown from in the first half of December. Reminded me of the move before, the massive uptrend that started in 2016. Just broke down, complete lack of interest. No one cares about this market. and then it just went up in a straight line for the next 6 months. Um, Not saying that's going to happen again, but that's some very good price action there in the last part of December. GDXJ, I think, was quite similar. Um, yeah, probably even better looking. It's sort of even the last couple of days there, it's held on to the top of that range nicely. Even though that's fairly the days between Christmas and New Year's, so maybe not that important, but nice hold of those levels. And if it can hold for another couple of days, I think the next leg is more likely to be higher than lower. A little bit overbought, but I think it can hopefully can consolidate there a bit. So all in all, I think that it's quite well set up for some of these gold markets in 2018. And yeah, the main thing probably is that just no one's really paying attention. No one's talking about a lot of these charts. And when I say no one, I mean in the broader investment context, the conversation. I mean, I focus a lot on stuff relating to gold, so it's always hard for me to judge. But when I look at sort of mainstream discussion about general markets, newspapers and whatever, there's very little discussion about gold at the moment as a good investment. Everything's about equities. There's a lot of people rotating back in equities. One thing that might be a little bit the ASX 200 is one that I can probably just bring up quickly as well. That's kind of it's been going up, but really I think just in sympathy with the US market and not only of its own strength. I mean, some of the mining related stocks have been doing quite well and probably their best runs for the last few years. But in general, I don't think it's worth owning the ASX 200, to be honest. If you wanted to have equity market exposure, I think you'd really want US or international. The ASX 200 has been pretty average. And I just think with the exposure to banks and a lot of these companies have been quite weak, like Telstra, Wesfarmers, Woolworths. These have all been pretty average performers in the last couple of years. There's just too much headwind for the ASX 200 to move a lot higher, even if those mining stocks. But the mining stocks don't make up the percentage they once did, so they're probably unable to drag it a lot higher. It's kind of sort of, this move here is just a little bit empty for me. It doesn't have that underlying strength to it. It's struggling to break out much past this sort of 6,000 level. And it reminds me a little bit, as you can see here, something similar happened in early 2015. It had this, it looked like it was one. I always thought this was going to break lower, consolidated nicely, and that was similar to this period here in late 2014. Had that straight up move in January 2015, and then sort of topped out for a while before heading quite a lot lower for the rest of 2015. So I had that, almost it got up to 6,000 again before moving all the way back down to 5. And that's kind of what I'm thinking might happen again. In any case, I don't think you're going to see all-time highs in this. Is what a few people I've seen calling for, but this move is kind of false and doesn't sort of lacks the underlying strength, I think, to go a lot higher. Maybe this is kind of a head and shoulders bottom here. There's sort of a massive head here, and we're sort of testing this shoulder level at 6,000, and that gives it impetus to go up and test that 7,000 sort of level. But I just don't buy it based on the strength of the companies in that index and the weightings in particular, as I said. So all in all, back on the gold chart, I'm pretty positive, and I think a test of these high 1,300 levels is on the cards for 2018.